Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, February 24, 2015. Daily chart of the SPY, and the melt-up continues. The band marches on. Markets were up across the board today, led by the Dow up about 0.5%, followed by the NASDAQ, and then the S&P came in third, I believe. Interestingly enough, maybe the transports and then the S&P. Yeah, that's what it was. Here's the order. It was Dow, transports, S&P, and then the all-important Russell 2000 was actually the lagging indicator today. The index was up the least amount, yet it was still up on the day. It was up about 0.2%. So about 20 basis points. And, that may or may not be anything. I'm not reading anything into that now. What I want to do is I want to focus on how high can this market go before it actually does and needs to. Well, it does need to now, but before it does actually pull back and correct itself from an overbought condition, right? So there's a couple of things going on, all right? So if you remember, if you switch your mind over to the S&P E-mini contract, since at least December, I've been giving you a number of 2135, and the 2135 is now all of a sudden in our sights. It's an achievable target. So, in December, when the market was, let's just pick in December. I was giving you that number right around here, okay, November, December, and that number showed up on my calculations, and then the market rolled over, and it became an unrealistic number at the time. But now, all of a sudden, we're making new highs. That number comes into play, and then I'm going to make an analogy to the SPY. So that's about 20 points higher from where we are. So keep that in mind, 20 points, okay? Now, you see this print here from the 18th of December. Okay, that high, and I've talked about this before a number of times, is 1212.97. So let's just call it 213 for rounding purposes. So 213 is about $1.20 away from where we are now in the SPY. That normally equates to about 12 points in the S&P. The S&P E-mini has a target that's 8 points higher, or 80 cents more in the S&P. So, or SPY. So let's take a look at something, and you'll notice I'm going to talk a little bit about what we call symmetrical markets, or repeating markets, or market symmetry. So you see this up candle here, and then you had a pause day, and now you're having another up candle. I think before this move is over, the level that we reach on the upside should be equal to around the length of this candle, which from high to low, high of 211.33, low of 208.73. Let's see, that makes it 9, 10, about 250. Okay, so from low on this candle, 210.76, 250 up from there is 213 and a quarter. Okay, you start to see. Now, I'm not saying this doesn't have to happen in one day. I'm just saying from the time this re-broke out, that coincides with in between this high here from December 18th and the high that would come in on the S&P E-mini at 2135, and the coinciding number on the spider is in between these two numbers. So what's interesting is I just see that there's a lot of upside targets that almost feel like they're magnets, or like we're magically being drawn to these targets. That's what it feels like at this point. Now, what about that old cycle weekly top business? Well, that still stands because we're still in the plus 1 week for the weekly cycle. So here's how this could potentially unfold. Here's where it gets interesting, okay? Let's say, this is all hypothetical, right? It's just an example, and it never actually plays out the way I map it out like this, but one day it will. So stay with me. Let's say over the next day or two we achieve that upside target. Okay, Wednesday into Thursday, all of a sudden we find ourselves up in this neighborhood at 213, roughly, give or take, on the SPY, okay? And that's still the 1 week late for the weekly cycle top. Now, remember, I normally will tell you that a market will rally into or decline into a weekly cycle top or a weekly cycle bottom. So that could be taking place. We could be rallying into the climax of the cycle top, okay, and then reverse off that for a couple of weeks as we work off some of this overbought condition. Do I know that's going to happen? No, absolutely not. Do I see it setting up where that becomes one of my top 3 or even 2 probabilities of what happens from here? Yeah, it's definitely in that category, at least in the top 3, worst case, okay? So, you know, what I've been saying is there are higher prices ahead in 2015, and we're seeing higher prices in 2015, but I'm talking even higher than this. Okay, I think we're going to have somewhat of a blow-off top at some point, and I don't mean, it doesn't have to be the long-term top. It may or may not be, but I think we're going to have some kind of a real melt-up where the S&P just goes up, you know, maybe 120, 150, maybe 180 handles or 180 points from some level in a compressed period of time. Maybe we're seeing the beginning of that now. That's very possible. I'm just not sold that we're going to see it before we see the next pullback in its entirety, but we'll take it one day at a time. Okay, let's move over to gold and let's see what we've got. So gold, you know what? Before we leave gold, on the downside here, you know, I did have a number in the S&P E-mini that we were supposed to achieve this morning, which was 2093, 2094, 2095 in that neighborhood. In order to do that, the market would have had to close, the S&P E-mini would have had to close below 2107, 2108. So let me show you an intraday chart and what that looks like, what that looked like here today. Okay. If I can bring up the hourly chart, here we go. Okay. So 2107, 2108. Okay. 2100. This is yesterday. Okay. Here we are in today. The low in this candle here was 2102. We immediately bounced higher. We retested a low at 2106.25 and bounced higher. Okay, and then the low in this candle, which was 2109, was the low for the day. Okay, and that was the ball game. So we were never able to close below 2107, 2108 on an hourly basis, and that's why the market stayed positive all day. Had we been able to close on an hourly basis below 2107, let's say, there was a very high probability that we would have seen that 2093, 2095 target reached. Now, is it off the table tomorrow? No, it's still in play if we go down to those levels and close below 2107, let's say. But I don't know that we're going to see that this week, or at least in the next day or two. Let's focus on the trend, which is up right now, and see if we can't isolate some upside targets. Because once we can isolate the upside targets, that gives us a better idea of how we can play it, how it comes into those targets, and what happens once we get there. And does the market give us some kind of a sell signal or a reversal signal? And that's what we'll be looking for from this point forward for the next couple of days. All right, let's go over to gold. I know this is long in the tooth. All right. GLD really didn't do much today. Tried to sell off. We got as low as, on the GLD, we got as low as 114.29, but then reversed higher, and finished, basically a little bit positive today, or maybe this is just the after hours quote. And anyway, regardless, it shows up 52 cents. So we're up. That's the after hours quote. 115.26 is the close today, and that was basically flat line. But if I bring over the gold futures chart, okay, I want to show you something important. Remember I was saying that the most important numbers that we know are 1191, okay? We had to close above daily, stay above 1191 for this bullish call to remain intact. Down here at the low today, no, down where? This is 60-minute chart. Low, yes, 1190. Okay, by $1. 1190 on the low, we reversed higher, came down and tested it, but never closed below that number, and that kept the market in what I'll call a bullish position. And in the aftermarket session, okay, gold's up at almost 1207 as I make this video, and from today's close, or from yesterday's Globex close, it's up $9.60, up a little bit less than that from today's close. We closed at about $1,200, so we're up about $6 or $7 from the close today. So I think this remains in a bullish position as long as we can daily close above 1191. That's my number. Okay, let's go over to crude oil. Okay, I'm going to bring up the crude futures contract. And what's interesting with this, and this has its own story. So this is the hourly chart. And remember that I had given you a number of times going back a couple of weeks of 49.70. The first time I gave it to you, I said if the market, oil was trading at 53.54. I said if the oil trades down or closes below $52 on an hourly basis, look for a quick shot down below $50. I made that call on a Friday 2 weeks ago for Monday, and then it actually started Monday. It didn't make it all the way below 50, but it happened on Tuesday, and then the market reversed higher. But I said it would get down to 49.70. We actually went lower at that time. However, if you look here, okay, the market fought I'm not going to say it fought 49.70, but let me show you 49.70. Okay, it's right here. Okay, this is 49.70 where the crossbar is. Look what's 49.70 represents. All this fighting back and forth all day long today until we couldn't hold it, then it broke down. Here, these tops are right at 49.70, give or take a penny, okay? This top here, these tops are close by. Okay, so this is an important number, okay? And this goes back a couple of weeks, and this is just a couple of days, but a couple of weeks I was telling you, look, here's a low here, okay? 49.82, not too far away. Okay, so that 49.70 number is meaningful. So until and unless the oil market can close above 49.70, we're not going to be able to rally, and there could be lower prices ahead if we stay below 49.70 on a daily chart closing basis. Okay, last one tonight would be the bonds, and we'll look at the TLT because this is interesting also. Watch this call. Now, I've been telling you that the bonds were due for a weekly bottom, and I told you that last week. Okay, and we were buying, and here's what happened, okay? I first gave you three numbers, okay? I first gave you this number I said would be good support for the TLT. This is when we were up here. I told you that this pivot top would be good support and I'd be a buyer down here. As we got closer, I took that off the table and I said, you know what? I'm lowering the number. I'm lowering it to 124.25. Okay, and that's my number. That's my buy zone for a weekly bottom and a multi-week rally. And then as we came into this number here on TLT and we got down to about 126, I changed it one more time and I said that's going to be the low most likely. And if it's not, 124.25 is another buy zone with both hands. And as it turned out, the 126 and change level turned out to be a pretty good low. And I'll show you where some of those other numbers come from. Look at the weekly chart, okay? Basically, you topped out a month ago, and you've had 3 weeks of down, okay, right into almost touching the 20-period moving average. And where does that 124.25 number come from? 124.25 is down here, okay? And it comes from what I believed. There's some calculations involved. There's a pivot top involved here. A pierce of the 20-period moving average on a weekly basis, intra-week, I thought would hold, okay, but I thought we would pierce it. And basically it was also a Fibonacci retracement level. So all those things gave me that number. But then when I saw the action in and around, we were trading at 126, I said this is going to be the low for a while. I mentioned it here a couple of times. And so what we had was we had a good rally for a couple days. Let's go over to the daily chart and we'll just see where we are. Came off this bottom, started up. And today was a monster rally, especially in the bond market. Yields pulled back a ton, and yields were down 3.5% today. That's a big deal in yields, down 71 basis points in the 10-year note. That's a big day. I mean, that's bond markets typically don't move like that. You see very few days like that. Here's one, here's one. Here's one, here's one, but the amount of days in between those there's at least 3 weeks of much quieter period each and every time or more until we see one of these big days. So I don't know what we'll see going forward. I do expect higher prices, but we'll have to see what kind of pattern develops and how this is going to make higher prices. We may just take a straight shot up into this 20-period moving average on the daily and pierce through. Maybe 132 is a good target on this. This is that gap window here, and that's really what I had my eye on anyway, and then this gap fill 133 and change. So we'll see what happens, but that was a good call, weekly bottom. This should hold for a while. We should see higher prices ahead. Anyway, I know this has been long-winded, but hopefully it's helpful. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in, folks.